Welcome back to the channel. Today I want to talk to you about what could cause a major Bitcoin crash in 2021. If this happens, I believe that this could literally cause a crash of Bitcoin by 50% or potentially even more. Now I have been a fan of bull market strategy or bull market theory going into 2021. I have been on this channel. Well, let's see where we're at right now real quick. Bitcoin currently is sitting at 23,000. So we're near all-time highs. On this channel, I have put up a video making my own prediction that we were going to hit $100,000 by December of 2021. If you think I'm off on that, let me know down in the comments. I've also put up a video. I'll link it above. I'll put it down in the description. All these videos so you can see for yourself. There's a video of Bitcoin hitting 300,000 as predicted by Citibank analyst. That he said that he thought it was going to hit 300,000 by December of 2021. And there's another video where an analyst says he thinks Bitcoin is going to hit $500,000 by December of 2021. I think that's a bit crazy, but I think as an investor in this space, you have to be mindful of what's going on, what news is out there, and you have to at least look at a lot of different viewpoints. Now, I predicted in a previous video, all three of those videos, by the way, will be down in the description, so you can do your own research. But I predicted personally on one of my videos that I thought Bitcoin would hit $100,000, but I said there was two possible scenarios that could really tank the price to at least 50% and maybe even lower, And if those two scenarios, either one of those two scenarios played out, then that could be bad news for Bitcoin. Now, one of the scenarios I think we've dodged, and that was I thought the U.S. government was going to come down a lot harder on private Bitcoin wallets, maybe even making things like TronLink and Ledger and stuff illegal. And I thought they were going to require us to have to hold our cryptocurrency on an exchange. I thought that was going to be bad for Bitcoin potentially. It looks like they're not doing that at all. They just want you to do KYC, which, I'm not necessarily a fan of, but that's okay. That's not going to affect the price that much. The second thing that could happen is what we're going to be talking about today, and that is this news legislation. And then, by the way, I'm going to talk about the news, and at the end of the video, I'm going to talk about what I'm doing to be prepared for a possible collapse in the Bitcoin price. And this makes me very, very nervous. And at first, if you just read this news headline that came out 17 hours ago from Axios, you don't think nothing of it. But most investors aren't looking at the entire market as a total dynamic. They're looking at just one cryptocurrency versus another cryptocurrency, and they're not realizing how things are interconnected. So we're going to be talking about that on this channel today. So first things first, White House proposes stablecoin rules. This isn't all bad. This is a short article. The White House on Wednesday released its initial assessment of regulatory considerations for stablecoins, a form of cryptocurrency designed to have less pricing volatility than more traditional cryptocurrencies like Bitcoin. Why it matters. The documents covers all U.S. stablecoin arrangements, including Facebook's Libra project, which is slated to launch next month. Stablecoins' lack of pricing volatility is achieved by being pegged to other assets such as fiat currencies and means they are well positioned to be used for consumer retail, a bet that Facebook is making. Now, inside the report, here's the bottom line. The bottom line is there's two concerns. There's two major concerns. One is that each cryptocurrency, each stablecoin has to be pegged to the U.S. dollar 1-to-1, which sounds like a no-brainer, but it has to be redeemable. It has to be redeemable. And that there has to be a time period. It primarily seems that the warning that there will be broad-based regulatory oversight of stablecoins, although it does include some specific guidance like maintaining a 1-to-1 reserve ratio and adequate financial resources to absorb losses and meet liquidity needs. So if people say, hey, I want to basically cash in my stablecoin, that has to be possible. It also wants there to be a swift and orderly claims process for stablecoin holders against the issuer, including that 1-to-1 redemption again. There's no explicit mention of requiring bank charters, which has been proposed by some in Congress, although it opens the doors by suggesting some stablecoins may need to rely on U.S. regulated entities as intermediaries. I think this is bad news for cryptocurrency. I think this is really bad news for cryptocurrency, but it poses a couple of questions. How many of these stablecoins are in fact backed up by 1-to-1 reserves? And what happens if the law goes into place that they have to be able to redeem one-to-one? Also, what about stablecoins that are decentralized, that have nobody controlling them or issuing them, such as DAI, DAI? That poses very interesting topics, or interesting questions. Now, why do I think this could cause a major market crash? Well, the most popular stablecoin is USD Tether. For a long time, all the way back, I think as early as 2017 or 18, there's been suspected news stories about people thinking that Tether is not backed one-to-one, and that they're just simply printing USD Tether tokens out of thin air. Take a look at this. Tether accused of minting, this one right here, this headline. New evidence suggests Tether does not have the dollar reserves it claims. This is back in 2018, the headline. Reports from the Central Bank of the Bahamas indicate that Tether Limited may have never deposited funds into the country. Think about that. Now, of course, we don't need to read the rest of the article, but that alone is troubling. Now, what does this have to do with Bitcoin? Hang on, we'll get to that. Let's take a look at this article. Does Tether have the money? It doesn't. I don't think they do personally. Like, that's my opinion, and I think it's pretty obvious that they don't have the money. But let's go through this article. Tether accused of minting almost $400 million in uncollateralized USDT to prop up Bitcoin. Tether, the largest stablecoin by market capitalization, has issued over $300 million in USDT during the last week. The sudden increase in supply has resulted in accusations that Tether is once again engaging in market manipulation, and that its stablecoin is still unbacked by dollar reserves. How Tether impacts Bitcoin. Tether and closely connected exchange Bitfinex have been involved in a large amount of controversy. Tether's USDT underpins billions of dollars of value in the cryptocurrency markets. Consequently, a loss of confidence in the stablecoin could prove disastrous for the Bitcoin price. To further exacerbate issues, Tether has refused to undergo audits or clearly disclose its banking relationships. The lack of transparency, along with other evidence, has many in the community doubting the company's claims that USDT is backed one-to-one by US dollars. This right here is the issue. It's not a good move for Tether. It's not a good look. So you have to ask yourself, if indeed you're backed by one-to-one by US dollars, why wouldn't you prove that? These concerns have even attracted the attention of U.S. Department of Justice. The agency launched a criminal probe into the company focused on potential Bitcoin price manipulation through the use of USDT on Bitfinex. If true, Bitcoin's price and trading volume could be overinflated. Newest round of USDT issuance. Beginning April 8th, Tether, now again, this is back from 2019. Beginning April 8th of 2019. Where are we at? Tether began increasing the circulating supply of USDT over the last month. The supply of USDT increased by 417 million out of thin air. The move drew criticism from Tether and Bitfinex watchdog Bitfinex. This is a guy on Twitter who always pays attention, who claims to have exposed the Bitfinex Tether scam, which was later covered by Bloomberg, the New York Times, and the Wall Street Journal. Tether is once again injecting the cryptocurrency markets with nearly $400 million of fake money. They've recently admitted it's not backed by dollars, but so-called reserves. Last time they injected this much fake money, we found out about CFTC, Commodities Future Trade Exchange, subpoenas, and the market crashed. According to research conducted by the University of Texas professor John Griffin and co-author Amid Shams, there is evidence that Tether is engaging in Bitcoin price manipulation. According to Griffin, in June of 2018 interview with Bloomberg, first, tethers are created by the parent company Tether Limited, often in large chunks such as 200 million. Almost all new coins then move to Bitfinex, he said. When Bitfinex price dropped soon after the issuance, tethers at Bitfinex and other exchanges are used to buy Bitcoin in a coordinated way that drives the price. As such, the recent issuance of USDT may fit Griffin's description that coincides with Tether's recent change to its terms and conditions. This is important. Terms of service, sorry. This is important. The change suggests that USDT is backed by other assets and the company is not responsible for losses endured by holders. This means that they know there's a risk there because it's not backed by US dollars. If it was backed by US dollars, there's really no risk. So here's the challenge. And here's how this can affect Bitcoin price, and here's what I'm planning to do, knowing that this is coming up on the horizon. If the U.S. government ultimately requires through regulations that Tether somehow prove that they have one-to-one reserves, they're not going to be able to prove it. So what they will have to do is come up with that. They're going to have to sell cryptocurrency, because I believe they hold a large amount of cryptocurrency. I believe they probably hold Bitcoin. And I don't know that that's necessarily all bad. I mean, to be very honest with you, they're probably making a bet that, hey, we might as well buy it. Bitcoin prices are going to keep going up, keep going up. They're probably believers in the space. So I don't necessarily know that that's all bad, because there's no other benefit for them, because they can't ever sell out of Bitcoin. They can't randomly profit by just selling out of Bitcoin. I mean, they can manipulate the market. Obviously, that's what they're arguing here. But if the time comes that they have to sell out one-to-one, and they have to start immediately show that they can provide one-to-one USD, they're going to have to sell Bitcoin. They're going to have to sell Ethereum or whatever they're holding. When that happens, the price is going to drop substantially. That's probably going to create fear, and we could see a major market crash in 2021. Major. And it can happen quick, and it can happen fast. So here's my sort of logic on this. First of all, I'm going to be setting up an account probably at Bybit or someplace like that, where I don't trade often, but I do want to be able to have the potential to be able to short the market if that happens. That for me personally. And the other thing is, for me personally, I want to diversify, not just diversify my crypto. On this channel, I talk a lot about earning, passive income with cryptocurrency, and I have my free newsletter, and we have the course down in the description and all that stuff, and it's on a lot of my videos. But even passive income, if you're stacking that up in Bitcoin or Ethereum or whatever, you have to. Crypto already is risky, so you have to diversify a little bit. Now, I personally have never been one to hold much in stable coins, but going into 2021, and the market potentially overheating, I think we're going to see more volatility in Bitcoin prices in general than we've seen probably in any other time in the market. I mean, I'm expecting, because of these regulations, I think we're going to see some regulations are going to look very positive, and it's going to drive prices sky high. I think we're going to see some regulations look very negative, and the prices are going to drop. So when I see the market near all-time highs like it is right now, I'm going to start pulling out a little bit in stablecoin. But the issue is which stablecoin, because literally Tether prices could collapse, even though it's supposed to be pegged. It's only pegged to it says it down here. It's only pegged US. Where's it at? Tether is worth $1 because it's generally agreed upon that it's worth $1, not because it can be redeemed for that dollar. Should that faith vanish, the repercussions would be material, widespread, and volatile. So literally, the price of Tether could drop. The price of Bitcoin could absolutely drop. So what am I going to do? Diversify my holdings, diversify my assets. I am looking at some altcoins right now. If you want to know what altcoins I'm looking at, be sure to hit the subscribe button. I'll be talking about that. And I'm one of the few people on YouTube telling people you got to be careful in 2021, even though I believe the price, 60% of me, 70% of me believe that the price could go, crazy, $100,000. I'm still standing by that. But it's going to come down to what's going to happen here. These are the risks we have to navigate to get to that price. So here's how I'm navigating that risk. I'm diversifying my my stable coins. I personally have known this for a long time, so I'm not a fan of USDT. So the two, not financial advice, but the two stable coins that I watch is both USDC, which is backed by Coinbase. So USDC is a stable coin, and this is backed by Coinbase. Coinbase is highly regulated. There is about as white hat of an exchange as you can have in the U.S. So personally, I don't mind holding their stable coin. And the other one is, which is a little bit interesting, is going to be DAI. Now, DAI is interesting. DAI is not perfect. It is most of the time. There are market conditions that can cause DAI price to go wonky, as it has historically a few times. But the thing about DAI is it's decentralized. There's nobody, and I like that. I like the fact my whole goal is getting away from centralized finance. So I like the fact that literally the U.S. government, outside of telling us that it's illegal to hold DAI as individuals, there's not a whole lot they can do to DAI. So I personally am probably going to hold a little bit in DAI. The challenge with DAI, because it is decentralized, it is a little bit more at risk for major price movements. But I'm going to, and I can do a whole video on how DAI is decentralized and how it works at another time. But I'm personally going to hold a little bit in DAI, a little bit in USDC, and I'm going to hold a lot less to nothing in USDT. Now, sometimes I have to hold USDT because some of the pre-sales that I do, they may want USDT. So I'll hold it to make exchanges to buy into pre-sale tokens at times. However, that would be my only reason for holding USDT. I don't plan to hold USDT long-term at all for me personally. And I'm probably going to hold more stable coins in 2021 just as a way to hold on to some of those gains, because I believe the market's going to be highly, highly volatile. But I still stick to, I believe that most likely, even if the price goes crazy, and I want to hold on to these stable coins, because if we see a huge drop in the price because of Tether, I'm going to be a buyer. Why? Because even though I think it could, literally, this whole Tether thing, I mean, this could be a scandal like none other. This could destroy the price of Bitcoin, like literally destroy it. I don't want to think about how low it could go. But I think that because so many of us have, and so many investors, so many institutions now, we expect a price above 20,000 at least. I mean, I know that even if it drops catastrophically low, I'm going to use those stablecoin profits. I'm going to use those stable coins to take some profits when the price is high, because I'm going to be a buyer when it goes low. I mean, we literally, if this unravels, this is a positive if you're prepared for it. And that's the key with, I found in investing, you gotta, the goal is to try to be right even when you're wrong. So there's nothing wrong with taking profits, even if Tether ultimately proves, oh yeah, they have every single dollar that they claim to have. If that, even if that happens, there's nothing wrong with taking profits at times when the price of Bitcoin is high. However, if it drops, you want to know that you're able to go in there and swoop some up when those prices get low. Because I would love to be able to get access to Bitcoin below 10,000 again. And I don't know, it might not ever happen. I'd love to get Bitcoin below 5,000 again. It might not ever happen. But if it does, you want to be in a position where you can sweep that up. Hey, thank you so much for watching. I'm doing my best to help all of us learn more about the crypto space. Hope you find my channel informative. Hope you find it insightful. And by the way, if you're new to cryptocurrency, I've got a video where I talk about investing in cryptocurrency for beginners. I'm going to put that video on the very end, and you can have a look at that as well. If you want to learn how to earn passive income with cryptocurrency, take a look down in the description. Look at our Crypto Passive Profits newsletter and our Crypto Passive Profits course. Hey, thank you so much for watching. This is Crypto Wealth. Decentralized cryptocurrency equals freedom. I'm out.